Welcome to World of DaaS, a show for data enthusiasts. I'm your host, Auren Hoffman, CEO of SafeGraph. For more conversations, videos, and transcripts, visit safegraph.com/podcasts. Okay, hello, fellow data nerds. My guest today is Scott Stephenson. Scott is the CEO of Verisk Analytics, a $28 billion market cap data analytics company. Scott joined Verisk from BCG in 2001 and was promoted to CEO in 2013. And since then, Verisk has doubled its annual revenue to almost $3 billion. Well, Scott, welcome to World of DaaS.
Thank you, Auren. It's a pleasure to be here with you.
But now, okay, Verisk was originally called the Insurance Services Office, or ISO, and it was founded as a nonprofit, right, in 1971 to serve kind of a consortium of 100 or so, or various insurance companies, right? Why was it originally structured as kind of a nonprofit?
Right. So it actually, it was about 250 to 300 insurance companies that were a part of putting the organization together. Just a quick bit of context, which will help kind of clarify how we got to where we got to, but also make an important point about data, which is that one of the things that can stimulate data to flow is in fact regulation, and that is the point of origin for our company. So even prior to 1971. The way that the insurance industry worked in the United States, and still does today, is that regulation occurs at the state level. And each regulator says to the insurance companies being regulated, I want you to give me some very specific, fairly granular operating data. I want you to make it available to me. That's my requirement.
Yeah.
They say two additional things around that. One is they say to the insurers, I don't want you to give the data to me directly. I'm going to name someone who stands between you and me.
Some intermediary
that's going to make the
data easy for me to consume, et cetera.
Exactly. So cause the report from company A in form to be the same as company B. That's the first. And the second is some data cleansing and assurance, some assurance that the data are accurate. So that's the first thing the regulator says. Don't give it to me directly. I will name somebody in the middle. And the second thing they say is, you, insurance company, have to pay for this thing that's in the middle.
Yeah.
I'm requiring it of you, but and I'm also telling you, you have to pay for it. So, okay, and that's been true for a very long time in the insurance industry. So the insurers were paying for this activity. It's called, stat agency, stat reporting. They were paying for it forever. In 1971, these 200, I think it was around 280 actually was the precise number. These 280 insurance companies said, hey, you know what? We're paying for this. Can't we do it more efficiently if we take each of these entities, which are at work in these individual states, and pull them together into one national organization?
So there was like a California organization, a Delaware organization, a Florida organization.
Precisely.
Okay, got it. Okay, so this is somewhat inefficient, and there's probably a lot of overlap between them, even though they have somewhat different requirements.
No, you're actually right on both counts. So the theory of the case was, well, rather than doing it 50 times, what if we just consolidated and kind of the guts of the data aggregation, the data cleansing, what if we just did that once? Wouldn't that be more efficient? And indeed, that has proven to be the case.
In some way, so ISO was like a big ETL system in a way when it started,
when it got started, right? Yeah. And then, I think that's pretty accurate. And then the other part of it is that the analysis is going to ultimately, why are these data being put forward? The regulators want to make sure that the insurers are solvent, and they also want to make sure that the public interest is being served. And so a lot of the data is kind of at the level of, what are you charging for this individual policy in this place for this kind of insurance coverage? And then what were your actual loss experiences against that same premium? So it's kind of it's pretty intrusive. It gets to that level. The observation or the theory of the case was, okay, well, so I'm trying to analyze the dynamics of profit and loss of personal automobile insurance in Nebraska. Well, isn't it probably the case that the independent variables, the drivers of the outcome, the causal factors, isn't it likely that it's kind of the same in Kansas as it is in Nebraska, and maybe even Missouri is Nebraska?
And also, if it's the same company that happens to be registered in those three states, then you kind of want to know they're solvent across all three, right? Because if they go bang on one, it's going to mess you up in the other ones, right?
Right, but it's also the case that any one company's underwriting methods are probably consistent across states.
Yeah.
And so the feeling was also that there would be gain analytically, because you should start out understanding the dynamics of personal automobile insurance or homeowners insurance or small business general liability insurance, and then you can find differences by locale as they apply. And isn't that analytically efficient? And that also has proven to be the case. And so 1971, the insurers said, let's not do it in all these separate places. Let's do it in one place. That was when the seed and the crystal, which is Verisk,
when all this data starts coming together for insurance companies, like it seems like it would solve a lot of problems. Like if you can imagine back in the day with fraud, you may have someone submitting, like a fraudster submitting a similar claim to 6 different insurance companies. And if you have a central place that's understanding the claims, it would be able to see that these claims look similar from the same person, and it would be able to flag it somehow, right? And so it seems like there's all of these really great downstream effects when you have these, like in some ways, this kind of cooperative of insurance companies. Did that start to happen pretty quickly?
No. And you're the pattern of thinking is the right pattern, but you have to add one other thing in here, and that is the data that we make use of. And this is an important thing for anybody that's a data oriented person, as you are and I am, and anybody that wants to build a business around it. The data that we use are permissioned, and so the permissions tend to be specific about the use case that is at work. And so these data sets that I was just describing were specifically for the purpose of understanding underwriting practices. Are they in the public interest, and the solvency of the company?
Okay, so there's a limit to how you could use them and what you could use them for.
No, exactly right. Right. So, however, observations about the pattern of claims is a very useful thing to look at in the insurance industry, because one of the besetting issues in the insurance industry is fraud. So, and this data set, the granularity on what is going on inside of the claims is not very great, because it doesn't need to be highly granular to serve the purpose for which that data set was put together.
Yeah.
So we went and built a second data set only for the purpose of trying to root out fraud in the claims flows. And I'll add one other thing, which is you have to pay a lot of attention if you're dealing with data which crosses over into consumer space. You have to pay a lot of attention to things like the Fair Credit Reporting Act, which carries with it, as you know, a requirement that you be able to respond to anyone whose data is in your data set if they want to investigate, well, what are you saying about me? And that's good public policy. I totally, right. But that first data set that I was just describing, the one that is kind of statistical by line of insurance, is not FC. It does not need to be FCRA.
Okay,
compliant.
so then it's much more complex.
You want to think about segmenting your data sets according to the use case, permission, but also governing regulation as it relates to data privacy or your responsibilities as somebody who aggregates data. And so at the intersection of all those considerations, you can end up building 2 data sets that are 95% overlapping, but you want to do it twice because of these differences.
That makes sense. Now, when you think about the history of Verisk, like it does remind me, it kind of rhymes a lot with the history of Visa. like Verisk, Visa was also kind of originally was like a not-for-profit. It was owned by the member banks. It was, but where does the analogy break down between Visa and Verisk, and where does it hold?
Well, I think mostly it holds in almost every way. I would actually say it's an apt comparison.
Obviously, there's Visa, there's Verisk. Are there other types of analogies, like if we look through history and stuff like that?
Well, it's a really good question. I have spent the last 20 years searching for proprietary content, and vertically oriented proprietary content.
Yep.
So content which is very powerful in explaining what's going on in some specific domain, some specific industry vertical. The logic of our company is vertical. We serve in the insurance industry, in the banking industry, in the energy industry, and the data sets are very different. And in most cases, the most proprietary data that we've got is made available to us by our customers, who then turn around and use the software and the analytics that we put together around all of it to make it valuable for them. Okay, so that's the basic backdrop. There are some industries, but not a lot of them, that have there is at work within the industry a degree of data sharing among the participants in the industry. So the example you've already pointed out, the example that is the most prominent one that everybody is familiar with, and that would be in the world of credit cards.
Yeah.
There are the two networks, the two primary networks, Visa and MasterCard. They're implicitly data consortia in that the banks that work with them agree that those two organizations will do some analytics. And then you've also got the credit bureaus.
Right.
And now you, on the one hand, you could say that is contributory in that, the providers of consumer credit solutions are making the data available to the three bureaus. But I don't think it's very much of a stretch to say that we as consumers get so much speed and reach in terms of our own transactions because you have these methods in the background so that we can show up and, there's a FICO score.
I mean, it's amazing. It's amazing how fast you can get credit today. 50 years ago, getting credit took forever. And in many countries, it doesn't have this kind of Experian, TransUnion, Equifax world. Getting credit is, the only way to get credit is to know someone at a bank or, someone to judge your character or something. Yeah.
Although I will say almost every country in the world has acknowledged the value of what we're talking about here. And so, in some cases, you actually have governments that sponsor something, along these lines. So it definitely has pushed its way out. They may not be as developed as what we've got here in the United States, but a lot of countries basically say, yeah, I want to be a part of this very high velocity, high reach, facilitation of transactions. There are a couple of other industries that have a degree of data contribution on the part of the players, but I've gone looking. I mean, I've spent a lot of time looking. There is
let's dive in, because I think this idea of these, like, whether some people call them data co-ops, I think you use the word contributory data models, right, and these are really, really powerful, economically powerful things. But they're a little bit different. Like, I don't know that most people study them in business school or something, even though they are so powerful. So I think it's worth maybe diving in a bit.
They're also hard to achieve. And that's why there's not a list of 30 industries that have big examples the same way that Verisk stands as a big example in the three industry. In other words, I've gone looking for the other industries, and there is no industry vertical on the globe which is as comfortable with and as developed with respect to data contribution, the consortium data model, as the United States property and casualty insurance industry, there is no
Interesting
vertical in a locale which is more developed, more evolved in this way than the United States property and casualty insurance industry. It is substantially
sometimes
more
these
evolved.
sometimes these contributory data models are the product, but sometimes they can be like a piece of product. Like if you think of like Gmail, like everyone's contributing spam signals into Gmail, and that makes the spam filter much, much better. So it's a contributory data model that is obviously maybe that the reason you use Gmail isn't because you want a good spam filter. That's like a nice feature. There's lots of other reasons why you use it, but that feature is really important. And it is solved by that contributory. And then they're doing a bunch of other things with like anti-phishing and other types of things that make the experience much better because they have all these users. And in some ways, like if you think of like Facebook is really just a data co-op. It only works because everyone else is using it. And then you could start, or LinkedIn in some ways is a data co-op, right? It benefits because everyone else is using it. So on the B2C side, it does seem like there's a ton of different things. And obviously very hard to get going. On the B2B, much less so, maybe because on the B2B, it's just like a lot harder to get it moving or get it going.
Well, I would actually characterize that one in both directions. So you're absolutely right that in consumer world, our demonstrated behavior is that we really value access. I'm saying as individuals, we value access to whatever it is. And we've demonstrated over and over again that we're essentially willing to trade off the privacy of our data for whatever we get for that, whether it's I'm in the network, I am, or it's simply being in the network, or some of the, the features that I can access because, I'm in there. But we have shown a propensity to say, yes, I lean into that. For a business, it's a much more, and I don't know how, I don't think people think deeply about it. How much, when you're essentially giving permission in some digital environment, I mean, how closely are any of us reading the fine print, and how much are we paying attention to opt-in versus
there is some sort of implicit trade, like in ways you're giving your information about whether you're in traffic to get the collective information back of, and to help you route and stuff like that. And you can imagine all these different scenarios where I want to know if I'm getting overcharged for my software subscriptions or something like that. And you can imagine a collective thing where every company auths in their general ledger into some common system, and then it comes back and it says, are you getting overcharged or undercharged? Or there could be all these different ways of, or if I'm getting a new vendor and or a new customer, and they're going to pay me, and they say they're going to pay me in 60 days, like, do they pay on time? Or, so you can imagine these like general ledger co-ops happening, and there could be all these different types of things that don't exist today that could potentially happen if companies were willing to auth their data and get some sort of trade back for it.
Yeah, exactly. And so then to kind of continue on with where you had us there, the fundamental basic point is that companies are not like your 13-year-old. Your 13-year-old finds some shiny object out there in digital world and says, oh, I'd like to have that, and thinks almost nothing about, whatever monitoring, tracking signals are being derived from their own, journey.
Yeah, maybe the 13-year-old thinks more about it than the 50-year-old.
Well, let's hope so. Let's hope so. But companies are not like that. Companies have been trained, I would say, particularly over the last 10 plus years, to know that data is an asset.
Yes.
That every company is at some stage of a digital journey. And why are they on a digital journey? Well, partly for efficiency, but partly also for the precision of decision making that can come from having great data sets which are well understood. So now, all general managers, commercial people, not just technically minded people, everybody knows, okay, data is an asset. And so it's going to be a longer and definitely deeper conversation with a business to say, here's what I would be able to do if you and your, peer companies made your data available. Here's what I can do. Are you interested in doing that? That's going to be a considered decision on their part. And that's the fundamental difference. And so,
yeah, they're reading the fine print, and they're okay.
Show me your technical environment. Show me that you're going to keep the data secure. Sign a contract which guarantees my data will not end up in the hands of my competitors. A lot of stuff like that. That's the difference, and that's why it's much more deliberate getting the contributory data model put together, where businesses are the ones that are contributing the data.
Now, these companies that have some sort of contributory data model or co-op, like in some ways, they essentially become like a common good, right? Across the industry, like they serve an industry, and often because of that, they get rewarded with some sort of like winner take most status. But it's like an interesting relationship they have with this industry, because they have a lot of power, but they also have to maintain their long-term longevity within that industry. Like, how should they be thinking about this kind of like, they can't just like raise their prices 10x or something, even though, because they have to serve that industry in a long-term capacity. So how do they think about both like the long-term and their constraints and how they work within their industry?
Yeah, well, I mean, I can certainly report for us that our context is sustainability, first of all. I mean, just in every respect, the sustainable performance of our company, and it is deeply in our DNA that we're here for our customers. So yeah. I start with those two things. It's about the customer and the value they're getting, and we're trying to always render things in a long-term perspective. And then add one other point, and that is that with our customers in the verticals that we serve, we don't have just one solution. We have many solutions, many different data sets, many different solutions. And so if we were to take any one of those and behave in a way that our customers would say, you're exploiting me. I mean, like you really are the presence, in this solution, you are the center inside of our industry in this way. But man, you're squeezing me on price, and it seems to be all about you, not about me. Well, first of all, the customers the first order response from the customers would be, okay, well, on anything that you do where there is someone that's competing with you, like I'm now going to go look at them much more deeply, because I just cannot put up with the way that you're behaving over here, where apparently you have a lot of market power, but you're abusing it. So, so they have that, that particular way of responding. And then over long periods of time, they could say, you know what, it would be really inconvenient. I don't want to do it, but actually I'm willing to enable a competitor to you. And actually I'm going to go talk to 6 other leaders in this industry, and basically we're going to sponsor the next data consortium. It's expensive. We don't want to do it.
Yep.
But you've been so irresponsible that we're going to consider our options, and that would be one option.
And one of the nice things about like once you get to the position where you truly are serving the industry from a co-op perspective, is that your cost of acquiring a new customer is extremely tiny, because they're so in some ways you don't have the price. If you think of like a typical SaaS company, like they have this pressure to always be raising prices because their cost of acquiring, because it's super competitive, and their cost of acquiring customers so high. For a company like Verisk, and maybe the few others that fit, your costs are so low that you can almost pass on those savings to your sales and marketing savings to the customer.
We do. That actually is part of the value proposition, is that first of all, no one customer would have anywhere close to the data asset that that we're making use of. But in addition to that, because we do it for the whole industry, their cost to consume it from us, rather than try to do it themselves, and they couldn't do it the same way because they wouldn't have the same data asset, but they could try to derives, excuse me, some of the same things, it would just cost them so much more. You know, I mean,
Yeah.
we're aware of how much we're saving them, and that's a very important part of the value proposition for sure.
Now, these kind of co-ops, they start to be successful using some sort of like micro industry or like a limited geography, like a country or something.
Mm-hmm.
And then once these like flywheels start to happen, like how I could see a company just getting like trapped in that niche. And even though it's a super profitable, really great niche or something like that, like how do you then like expand or move or add services? Do you expand within the industry you're serving and add other flywheels? Or do you look for like similar businesses in other industries that you could use the same technology for
Right.
to like, how do you think about that strategically?
Yeah, so there are three paths, and you mentioned two of them. So just to recap those first. So yeah, a new solution to the same customer.
Yeah.
So watching their emerging needs and then asking the question, well, okay, are there data assets which are available to try to sort of speak into that emerging need? And if not, can we try to maybe develop them? You know, so that's one thing. The second thing is, and I was on this point earlier, I've gone looking for other businesses which are fundamentally this consortium model,
Yep.
Contributory data set, because we know the power of it. And when you see it and it's established, you just know it. You know, there aren't that many of them. That's my report. I'm not saying there are none, but there aren't that many of them. And of course, and there is power in bringing your next solution to your existing customer because you've already got distribution, et cetera. But let me give you But let me give you the third one, which actually among the three that we're talking about is either one or two. I mean, it's in many ways maybe the most important idea. And that is, in the world of data analytics, I think of it as a spectrum. And the two ends of the spectrum are defined as, on the one hand, content richness, and on the other hand, software intensity. So there's a large number of businesses in the world, which actually, it's the SaaS model from the first day. It's basically, I'm thinking about digital workflow, which may include analytic, and like, that's what I'm doing. You know, that's what the team is creating basically from day one. So that's the software intense end of the spectrum, aimed at making data kinetic and then deriving value from the data. And it could be, it could be that the SaaS solution is more about the flow of data, you know, which includes, you know, cataloging and categorizing and, you know, things like that. But it can also include explicitly analytics for dealing with the data flow. But at the other end of the spectrum, you've got content richness. So like, I have specific signals that I have access to, and I'm mining those signals for meaning, basically. So the reason that I lay all of that out for you is to make two observations. The first is, whichever end of the spectrum you start life at, your second act is always going to be to move in the other direction. If you start out content rich, you are almost inevitably going to want to become more software intense. Why? Because it's another source of value for your customers. In other words, I have all this data, I threw it at an analytic.
Why is that? Because you can see a scenario where a company is really good at the content, let's say, maybe not as good as the software, or vice versa. And you know, you can see like in some ways it does take a different DNA to do Experian than FICO. But
a content rich body does not have to reject software intensity. And you're right, they're different. They are different capabilities, but the attraction, if you can make it work, is very strong, because the part of the sort of recurrence of the analytic that you're providing, you know, so data boosted through analysis. Now I can say things that I couldn't say before that hopefully have, you know, a precision to them and a predictive quality to them. that you can make decisions around. All of that becomes just that much more valuable if I am also providing to my customer this thick software, which is basically the conversion of those signals into their own world, basically. And that in and of itself represents value. And because you understand the content and the signals, you are in a position to do that. You're right. It's a different discipline to create digital workflow than it is to go crazy with the latest analytic method and a lot of data engineering methods. You're right. It's a different technical discipline, but it's not that they are incompatible.
That's
if
right.
what you're
Yeah.
if what
You
you're
might be signed to
organizing,
the exact same person.
well, that's my point. You're
Yeah.
going to the same customer, right? And you're solving the same their same issue. You're doing it with content richness, but also with the boost.
And how do you know when you're at that point? Is it just like, okay, we're no
Now what are we
longer
gonna-
growing
now-
super
now-
fast, and so
now what
now
are
it
we
makes
gonna
sense
do?
to layer another on? Or
Now what are we going to do? Right,
Okay.
exactly. And because you're so hungry to add value to your customer, because you're about your customer, you're so hungry to add value any way that you can to your customer. And that's really what gets you leaning into that. And let me add one other point, because we're here talking about data, right? So
yeah,
I think this is, so if we have colleagues on the call with us, that it's kind of all data analytic for them. Here's a very basic observation from the way the world is actually working. And that is that if you take my continuum one more time,
yeah,
if you start out with a very strong, dense, rich, content deep business model, and again, I'm going to argue that in B2B world, that all really works when you're vertically oriented.
yeah,
Okay. To go from there to adding the software intensity and just amplifying your solution is a much more reliable way of getting an even bigger business than
Yes.
starting at the software intensity and trying to cross over to content richness.
yeah,
And I can explain why that is, but basically, in the verticals we serve, there's the fill in the blank tech company, so there's the InsureTech and the
Yeah.
FinTech and the energy tech, and a lot of what's being referred to there is the software, and it's the SaaS. It's a pure SaaS play, basically. We have to really watch out for confirmation bias when we look at the world of SaaS players. I know we're here talking about DaaS,
yeah,
but just let's talk about SaaS for a moment. You can find successful examples of companies that started life as SaaS, and they got a long way, because they were the leaders and they were facing a large addressable market. All good, right? All good. So you could say, well, isn't that so admirable? The growth rates are so high, as opposed to if you're trying to start a contributory database from zero, that takes time. That's hard work. You don't start to hit the revenue cash register for a while, because first you have to assemble enough content to where it's even meaningful. But here's the point: on the SaaS end of the spectrum, for every company that you can point at that is a success, there are 100 that died. That they never made it across. So they wrote some interesting software. They got a couple of users, but you yourself are, like, it's all the CAC thinking, it's like, how much can I spend to distribute, but I don't really have distribution. The customer base isn't spinning up fast enough. And those customers that I do have, will they trust me with the data? Will they actually permit me to use the data that's flowing through the platform that they gave me? That's very uncertain. You cannot really count on that. On the other hand, it's, there's a time dependency to building the contributory consortium data set. But once you've achieved scale, the value is probably going to be there as long as you do your work well. And now the crossover to the greater software intensity, it's work.
Now, what if you're giving advice to a small company? The Verisk is now 50 years old. Some company that just started a couple of years ago, they might not want to wait 50 years. Sorry, go ahead.
Get your expectations in line. That's the very first thing.
Yeah.
That's the very first thing. And you really have to think about what can you sustain in the build phase. So you've got to scale your cost factors to what you can sustain, and be realistic about that. And it will take you time. It just will take you time.
No,
but it's worth. But you have to have the courage of your convictions, because it'll take time. But if you get there,
right. So get rich slowly rather than get rich quickly, right?
Or it's I use that same phrase, but I say get rich steadily.
Steadily, okay, like that. Now, one of the I really, there's another quote. Verisk is probably most famous for the insurance contributory data model. But like 9 years ago, you bought this other company, Argus, which to me looks really similar to the core Verisk business. With one
difference.
Okay, what's
well,
the big
obviously,
difference?
serving different customers.
Yeah, it's obviously
obviously
consumer financial data and everything. But like, what's the big difference that someone from the outside wouldn't see?
No regulatory mandate.
I got it. So it's a harder one to get going because there isn't a regulator forcing everyone to work together. And so you really have to show that core benefit. Right.
And, at the end of the day, we hope we do a great job, but let's say we weren't doing a great job. The fact of the regulatory mandate is one more reason to keep any consortium member leaning in, even if they're thinking, well, I'm not sure about this. I don't know how, but absent the regulatory mandate, all of the goodness you're providing could slip into the category of nice to have as opposed to must have.
Got it. So on the Argus business, there's almost a higher bar where you have to make sure that the customer is really getting a high ROI, right? You're always trying to measure that ROI for that customer, because there's nothing to fall back on. If your ROI starts to dip below a certain level, they're just going to leave.
Yeah, we try to be very clear about the ROI with everything we do. We're just manic about trying to understand what's good for our customers. It's just that all else equal, a customer would have somewhat more optionality on whether or not to work with you when there isn't a regulatory mandate. And that's really the difference. But yeah, the data assets over in the financial services, the banking vertical, are just remarkable. They're just amazing. They're granular. They're, the data asset doesn't exist anywhere else.
No, Verisk is kind of like, in some ways, like the original InsureTech company, like well before InsureTech is cool, but it's really not. For a 28 billion like market cap company, it's not well known. I checked, like Verisk has 3,900 followers on Twitter. So it is like, have you intentionally decided to keep the company on? Obviously in insurance, everyone knows about it, but have you intentionally decided to keep the company out of the radar broader in a broader context?
Well, I guess the way I would put it is that for us, it's so much about our customers that we're not really trying to, stand up and
you need to advertise on Meet the Press or something.
Look at me. Yeah. There are some places where actually we do need to raise our profile. We have a great team. Our hiring managers tell me that when they're out trying to bring, the next super talented person into
like
the
a
company,
software developer, they may have never heard of it, and
cloud architect, what have you.
Yeah. That could be helpful.
They tell me that the first 15 minutes is just explaining the company.
Okay, yeah.
And then after people get it, it's like, oh, well, that's interesting. Yeah. Like, okay, what's the job? Like, okay, let's talk about it. So I get it from there, but definitely, the companies that are in the verticals that we're serving, they all know us, and we work with all of them. So.
What advice would you give like a data company, let's say SafeGraph where I work, what company if you were giving us, what advice would you give us if we're going to break into the insurance industry? Like, how do we think about the insurance industry different? Is there some like different quirks that we would think about than breaking into some other industry that's out there, retail or financial services broadly, et cetera?
Yeah. No, I would add a couple of things. They all go kind of the same direction. So, you have to think about what's your attachment point. What's your attachment point to the insurance company that you would like to have?
What do you mean by attachment point?
Yeah. So you can attach in several different ways. One way that you can attach is having really very capable, very empowered human beings that are the front end of your business model, and send them in to the companies that you want to work with. So the attachment point is a human being to a human being, and maybe a fair amount of the value add is actually your human being's translation of what you've got into the value proposition for the other company. So that could be one attachment.
A great enterprise salesperson or something, or
right. And by the way, the things I'm going to lay out here, they're not mutually exclusive. So you kind of want to think about all of them. A second one is back to what I mentioned before. Do you want to build software, which is the attachment point, at which you integrate into the customer's own digital platform? So now, when you come with all the goodness, which is your data and the signals that it provides, as it relates to, be very easy to attach to, serve it up through API and through APIs that are sensitive to the workflows on the other side, and let that be your attachment point, or actually create the software gearbox that the customer also licenses, or maybe you give it away to them, but now you are completely in line. And so now that platform that you just gave them is the environment in which they do the work related to the data and the signals that you're giving them. So there's lead time. You have to build that. You have to know it's what they want. You have to know how that attaches to the workflows inside of your customers. And you have to think about razors and razor blades. It's like, that attachment point, maybe I kind of give it away, and then, okay, they start to use it. And then the third one would be to partner. So go find somebody that's already well attached to that market.
Verisk is already in, and we could sell through Verisk in some sort of
like
way.
That.
Okay.
Right. And in that also, it could be that what you've got is integrated in with what we've got before we even present it to the customer.
Yeah. And you're co-selling.
So like make that tie.
Now, I know that we're both huge fans of the book 0 to 1 by Peter Thiel. And in some ways, like, it could have secretly been written about Verisk, right? The core central theme is competition is for losers, right? In the book. Like, what lessons have you gotten from the book, and how have you applied that to running Verisk?
Yeah, to me, so I think, as you say, I think it's a great book, and I'm really glad that Peter teases out the distinction between 0 to 1 and 1 to N.
Yep.
Because they both actually represent innovation, but in different ways, and we actually need both. Yes. I mean, if you were to ask me, in the sweep of human history, how much of a difference has been made in the 0 to 1 innovations, and how much of a difference has been made in the 1 to N innovations? I mean, we want both of them, obviously.
Absolutely.
But if you go back to the year 0 AD, so 2021 years ago, the people who study these things tell us that there were maybe 150 million human beings on the planet.
Yeah.
Right. So now, in the span of only 2,000 years, I mean, and it is only 2,000 years, 150 million has become more than 7.5 billion.
Yes.
And lifespans have gone up from, in the 20s on, again, people are modeling, but that's kind of right, to you can reasonably expect to live into your 80s if you live in a developed economy.
Yes.
I mean, this is spectacular success for our species. Unreal, unbelievable. And if you were to ask me, and this is totally just informal, this is just, my sense of it, I think 1 to N had a lot to do with it.
Absolutely. Yeah.
Kind of going from being able to get 3 bushels of wheat out of that acre to 4, and then 4 became 5, 5 became 6. But at some point, you have enough people that have increased the productivity of growing crops enough that there's actually, the whole community now has surplus. And so somebody then can then go and say, this hard stuff, which is metal, like, what can we do with that? Now you create
the way I think about it in the company is that you've got these two things. One, you've got these series of 1% improvements, which are really important. Like, how do you optimize your sales team, et cetera. And obviously 72 1% improvements doubles, right? So that's a huge thing. And then you've got these step functions that also happen in companies, and you do need both. You need to,
Precisely.
you can't just have the step function. You can't just have the series of 1% improvements. So they're really important.
And you organize, and the point is you organize around them differently. You literally think differently, and you organize work differently in order to be
different people are better at one versus the other.
Almost certainly different people as well. Yes.
Or two, a couple personal questions before we wrap up. So
Sure.
one of them is, you're really one of the few Fortune 500 CEOs that talk openly about their faith. And you seem to be much more comfortable talking about it now than you were earlier in your career. I heard you say that you kind of, you once passed up an opportunity to say Jesus was your hero at a BCG event, and it really felt like terrible grief about it. Like, how has that kind of, like, in your own kind of mind, in your own heart, evolved over time?
Well, I did have that defining experience, and when you have something like that, you just don't forget it. I mean, I feel like I betrayed the thing that I always said was my prime commitment, but I had a chance to demonstrate it publicly, and I didn't. And so the way that I felt after that is a total cautionary tale to me, to just simply state my commitments, and just be prepared for whatever effect that has in the conversation. My experience has been, as I have done that more, I mean, so first of all, the spirit of the cultural age that we're in right now is authenticity and state who you are. Yes. Anyway, I mean, the culture kind of invites it. I mean, the number of people who I didn't ask them, but they just start talking about what they're passionate about. I mean, there's just a lot more of that than there was when I was a younger person, and
right, you had to conform more in the 70s, 80s.
It sort of felt like you were just kind of thinking a little bit harder about how you presented yourself, and I'm just, with time, I've just become extremely comfortable in my own skin. But the other thing that I would say is that, so on top of all of that, so I had a negative motivation. I feel invited by the culture around me in many ways to just state, that I'm a Jesus follower, and I'm passionate about it. But I'll tell you, the third point for me that is out there is, it's interesting how frequently it actually, when I will sort of do that, when I will state my commitments in that way, it's interesting how frequently that creates room for the other person to do the same thing. In other words, folks are walking
you're the
around.
CEO, so now I'm a manager level person, and I have a belief that I might be worried is not conforming, or and I might be more willing to be open about my feelings.
Well, and I take pains, and I have to be thoughtful to not you zeroed in on people that are in the company that I'm a part of. I'm expressing myself to people I just meet. It's just in any walk of life. But I do have to be careful within the company to make it abundantly clear that, like, you don't have to agree with anything I'm saying about my own personal. Your job here is not contingent upon agreeing or seeing it the same way that I do. Express your own commitments. That's what kind of the inclusivity agenda that we talk about so much at companies should really be about. Bring your whole self to work, and you will be embraced by this community. Be who you are. And that's inclusivity. And so one way of kind of inviting inclusivity is to kind of include myself, to be willing to.
You have to be a little bit more vulnerable to do that. Right. Okay. That makes sense. And that is, I would say that is a big difference in CEOs today than it was 20, 30 years ago.
Completely. Yeah. You basically better engage with your people a lot. You do not sit in the corner office and write memos. Interact with your people a lot. And not only that, but when you get in these 10, 15 person meetings, and it's, and you're going into deep things that relate to the business, but also who you are. I'd say the other difference with, a few decades ago is you better have some game. Like you better actually be a real human being. You
Yeah.
better value the other human beings that you're in the room with. These are good developments, as
Yeah.
opposed to, hey, I'm the boss, so essentially I'm going to
Well,
tell you
also
what to do.
people have choice. They could go work for another company tomorrow, right? These are all
Totally.
everyone who works at Varus is a super talented person. So
yeah, I mean, for those of you who are a couple decades younger than I am, honestly, when my cadre came through and we were looking for our first jobs, the best job was the one that paid the most.
Yeah.
I'm serious. The best job was the one that paid the most. Now we all know we're supposed to ask, well, what's the purpose of this company? Does it serve some?
And
does
am
it
I
have a good
learning?
purpose?
Is it going to be interesting?
These are great questions.
How are you going to treat me? Yeah.
25-year-olds today are much better and more sophisticated consumers of employment opportunities than my generation was. I mean, they really, really are.
I know one thing that's also, I think, a little bit different about you is that you're CEO of a huge company, mentioned $3 billion revenue, 20 billion market cap, yet you're insanely good at responding to email. Like, how do you manage all these? I mean, you must have like crazy amounts of things coming out your inbox.
Well, I would say a couple things. One is, it is helpful to anyone if you kind of know fundamentally what you're about, and you know fundamentally what matters, I guess I would say, because if every email that I responded to, and thank you for noticing, by the way, because I take it very seriously, but if you know what you're about, then there's something presented in this email. You can sort of go inside, you can think about what you were just presented, but also kind of go inside and, sort of put it up against the things that and the things that you've thought about, and you can respond quicker.
Yeah.
If you know what you're about. So that knowing who you are promotes efficiency of response, I would say. But then the second thing I would say is that, I've had a very stable and relatively uninterrupted career, but I did make a big change, a big pivot in my career when I left. It was essentially a 2-year period between when I left BCG as a senior partner and when I entered what is now Verisk. It had a different name back then, but there was a 2-year period in there, and I had a sense of the destination. I hadn't identified Verisk, or what it was called back then, but I had a general, sense. And my point here is, I remember in those 2 years, so like you've cast yourself off from something. Like I was totally platformed to BCG. I could call my partner in Kuala Lumpur and ask her, like what's the latest in Malaysia, because I think that's meaningful, for my client over here. So I felt, I was very, and then all of a sudden I felt like this just teeny little, kayak bobbing in the middle of the Pacific Ocean. And I can remember so distinctly the feeling back then of, so you're trying to generate something. It's original. You're trying to get it going, basically. And so so you're reaching out in a lot of directions. I remember what it felt like when I would ping, 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 but I wasn't getting the inbound.
Now you know what it's like for every founder entrepreneur. We know.
Does anybody know or care that
totally.
I'm out here, and and so I just realized in that experience, what, one of the ways I can serve other people is to simply respond, because it says, what, the universe is not indifferent to you. The universe, at least this one little speck of the universe, you reached out, heard you, and came back to you. And I know how it made me feel when people did that, when I was more that kayak bobbing in the middle of the ocean. I know the encouragement it was to me. And so why not, I just want to do that for other people, because
it's amazing. When I was in college in the 90s, I would occasionally email Steve Jobs. And he would always email me back within and he knew I was a college student. I was emailing from my berkeley.edu email address. Like he would always email me back within 8 hours or something. You maybe with just one word or something, but it was amazing. He was how on top of it was. And I always remember that.
The universe answered you. You spoke to the universe, and the universe answered you, and it felt good, right? It was existentially affirmative. Well, we can do that for each other.
Our last question we ask all of our guests, what would you have told yourself if you went back to, yourself in high school or college? What would you have told yourself to save yourself either like time or money or emotional well-being? What would you have done differently?
It's not so much sort of the efficiency of the journey, but it's something that I would say more I had to learn through experience, which if I had been told and I could have believed it, probably would have saved me some cycles of anxiety. So what do I mean by that? Today, the phrase imposter syndrome gets thrown around a lot.
Yeah.
We hear that a lot, right?
Yeah.
The thing that I want folks to know, so I think it's fair to say that kind of the outcomes in my career are ones that, a lot of people would be happy to have.
Yeah.
And I feel believe me, I feel very fortunate and very privileged to get to do what I do. But my point here is that when I was 24 and when I was 29 and when I was 33 and when I was 38, I had experiences of what people are talking about when they refer to imposter syndrome. Another way of saying that is, do the people who just gave me this new, bigger responsibility, do they realize that I'm not ready for this job? My experience base has not prepared me for this job. I mean, I have some skills and, I have energy, but like, do they realize kind of where I am in my journey relative? And so, so I experienced it when I was 24 and I experienced it when I was 29. And yeah, it's kind of anxiety provoking, sort of like, what am I going to do? Like, wow, but you have that happen to you enough times and you come to understand, oh, that's just the process.
Yeah.
Like this is not only
you can't learn if you're not working on something where you don't have a high failure rate. If you're put into a new thing where you have an extremely high likelihood of success, your growth is going to be capped.
Exactly. And it is the source of growth, not only for people individually, but actually for the organizations or the teams with whom they work. It actually is the way that everything advances. It's the one to end form of growth. There's also a 0 to 1 where like you just, in a moment, you kind of rethink everything. But the 1 to N is multiple times getting put into situations that are just bigger than you are.
Yeah.
But you go through it enough times and you get to the point where, oh, it's not me. Like this is the process.
That's what happens. Yeah.
This is in fact, this is the way we want it to happen. But the issue is you don't get told that, it's not necessarily highlighted. And that's why I want to highlight it for maybe some folks that are on our call today that are a little bit earlier in the journey. So when you have that experience, hopefully it won't have to be for you the way it was for me, that I had to go through it 3 or 4 times before I got, oh, it's not me. It's like, this is the process. This is it. So if you can get it at the first one, then you can just save yourself the mental energy of sort of like, oh man, am I just going to keep ending up in places where I start out not feeling capable? Well, maybe, but actually you shouldn't resist that. It's live into that. So if somebody had told me that when I was 24, I don't know if I would have believed it or not, but I think it's really true.
I love, this is great. This is a perfect place to wrap. Thank you, Scott, very much for joining us at World of DaaS. This has been really great. Thank you so much for
my pleasure. Or always good to be with you, Auren. Thank you. I look forward, and may it be not too long until we can again break bread together. Last time we did it, that was such a fun evening, and I look forward to March
2020. It was one of the last few great dinner parties.
The curtain was descending even as we were finishing dessert.
Exactly. Thank you.
All right, my friend. We'll see you.
Thanks for joining us. If you enjoyed the show, consider leaving a review. For more World of DaaS, and that's DAAS, DaaS, you could subscribe right here on our YouTube channel, or you could find me on Twitter at Auren, AUREN, Auren. I'd love to hear from you.